Welcome back, ladies and gentlemen, to a wonderful Saturday afternoon here. And I want to just have a quick Saturday open ended discussion just about this kind of hyper inflated market. I was sitting down with my parents the other day having kind of a interesting conversation because their property, which they were trying to reposition themselves kind of into a retirement phase, where they were trying to buy a house while they already owned a house, trying to sell it and then use that capital to get into another property. And I'm not going to try to say too much here because I don't want to, bleed out too much information here. But it was just crazy because back then, and this wasn't even a year ago when they were trying to make this transition, their property was valued at about 1.2, $1.3 million. And I thought this was a fun conversation because we were walking around today looking at real estate, and it's so insane that within under a year's time frame my parents are now getting offers on their property for 1.8 million, but the valuation should be closer to about 1.92 million dollars. And when I was looking at the real estate market, I'm living in cottage country about an hour out of Toronto, right? And the properties out where I live now, there is none. And the supply and demand is so disconnected now that homes are now selling for more out where I am than they are closer to the city, which is kind of mind boggling to me. And I kind of feel bad for my parents, right? Because they're trying to make this transition. They're not like the highest income earners, and most of their value is within that property. But walking around different areas of the surrounding city, I mean, there's hardly any supply on the market right now. And it's really neat to see this divergence going on where when do we hit this peak, right? Because I mean, this can't go on forever. It just can't. So I wanted to just quickly open-ended conversation on Saturday for anybody that wants to discuss some of this stuff. At least bubble tea is still cheap. Well, not cheap, but it's still the same price. But whether you're walking into a grocery store, going to the gas station, I mean, even looking at the stock market in general, it's not uncommon for a normal person running any kind of mathematics to say that this stuff is getting insanely expensive, right? And it's just I don't feel as bad for people like myself, but I know that there might be some newer people that are trying to get into the investing game, and I'm trying to figure out where do you position your capital right now, because like you can't save money fast enough to put a down payment on a property. It's like you're kind of stuck making this dwindling decision that you have to stretch yourself and pray to God that this market keeps going up, because it's the only way that a new person can enter the real estate market. Now, I know there's a lot of people in the US, so I kind of want to throw this conversation out to anybody that's in Canada, the US. Where do you live? What's the real estate market looking like? Is hyperinflation hitting your bank account? Are you starting to feel the pain? I mean, I feel like we were in this period of just hyper saving, right? Like just like I banked so much money last year because no one was hanging out, no one was going out to dinner, and prices were dropping like crazy. And now we're in this the other side of this, right? Where the only thing that can really tamper this is interest rates going up. And the Bank of Canada is going to start raising interest rates earlier than anticipated in Q1 of next year. But the question is how much is that going to cushion this blow, right? Because I listen to a lot of realtors, man. I mean, I listen to like a lot of guys on YouTube, whether you're talking Grant Cardone, whether you're talking Ben Mala. I mean, Meet Kevin always advocates you should always be looking for real estate deals. And I totally agree. If you're in a specific market, you have capital to get into it. I mean, you should always be looking, but it's just so damn competitive. And all these realtors say the same exact thing. I don't know when it ends, but when it ends, it's going to be bad because it's just nutty, right? I mean, Grant Cardone said the best thing ever, and he talked about the next big real estate crash. I honestly think this hyperinflation, if it keeps going the way it's going, we're going to see a decent 20 or 30% correction. But in that's probably more in the macro aspect of things. Like I don't know a time frame, maybe 1 to 3 years, but looking about 5, 10, 15 years out, I think Grant Cardone said it this the best, that he thinks the next big real estate crash, and me and my parents were discussing this yesterday when we were kind of talking about the retirement as well, what brings the market down. And right now boomers own over 50% of the entire real estate market, and most of them own more than one home because people have cottage homes, et cetera, et cetera. And what's going to end up happening is my generation has been raised to not like real estate. If you got into real estate, I want to hear about it because you're probably making a fortune right now. But people like myself look at, stabilizing income and just paying rent and just trying to keep things nicely cushioned without too much chaos in your life, right? But when your parents start passing on and they have all these properties and they own the vast majority of real estate, people like me don't want to deal with it. Millennials haven't been conditioned to deal with the real estate market. They don't want the overhead. They don't want the repairs. We kind of want to have this kind of comfortable, less chaotic life of these high repair costs. And they ran some statistics in Canada And most millennials regret buying a home because it's keeping them broke. They can't travel, they can't go out, they can't drink, they can't have, you lose your good time to dealing with these inflated markets. But what's going to happen, right? When in the next 10, 20 years, when all the boomers start passing on, handing this real estate over, there's a lot of speculation from people like Grant Cardone that it's going to cause a mass influx of supply on the market because we're just going to sell the homes. I mean, when I look at what my parents' property is worth, like I don't want to take over a farm. And I mean, they might think about retiring there. And I feel like a lot of millennials think that way when they look at these big homes or like these general homes their parents own that are worth millions of dollars. And they're like, why would I want to deal with that? And there's, again, speculation that those homes, because of people like me, are going to dump onto the market. And we're going to go from this period of no supply on the market to a crazy period of oversupply. And it's going to completely drive the pricing down because I don't feel like we're in a 2008 financial crisis. I don't think we're heading in that direction right now because thanks to 2008, I mean, the banks have really made it hard for people to get mortgages. So I'm curious to who's buying these homes. So I want to know if you own a home. Let me know what you think in the comments here. If you're owning rentals, if you're living in a house right now, like how did you find the experience of buying it? If you bought it anytime in the last 2 years, I would love to hear more about it because obviously, like I want to get into the real estate market where I'm planning on sitting on my hands probably for about another 2 or 3 years and just stacking cash. Yeah, this good point, man. Raul's like, I plan to move to Alberta or Halifax. That's the thing, right? Like, I know a lot of people have been moving to like PEI, the East Coast, West Coast, anywhere where like it just the demand is a little different, and you can pick up homes for like 300,000, 500,000, and have a really comfortable lifestyle. But I kind of feel like we're living in a world now where to be a millionaire is to be middle class in most places in America and including in Canada. So it's frustrating, right? Like, I mean, we were just joking about this, like how hard we've had to work over the last several years to get the money saved that we currently have. And even that still isn't enough to be comfortable or relaxed. Like you're always on edge all the time, just trying to fight to keep up with what we define as middle class today, which unfortunately has changed drastically in the last 3 years. I'm originally from Halifax, beautiful city, but it's getting expensive. Yeah, but I don't think it's just Halifax, man. It's literally everywhere, right? And how do we define expensive in this market? Because even if things cool off, the question is how low does it go? And are these supply chains going to fix themselves out to the point where we see the reversed inflation? That's a lot of speculation too. And what is reverse inflation do to the market, right? When all of a sudden, and I know this is going to happen, by the way, like this is one of the most intriguing things that I've been thinking about because I work with so many private companies. I'm doing this new job where we just kind of interview all these CEOs and help them kind of run their YouTube channels and stuff and promote their media. But a lot of these guys, whether we're talking about people in the medical and pharmaceutical sector, or we're just talking about people that are building kind of any kind of machine parts, the problem is they're having a hard time getting the product to build the parts. And same with medical, right? Like you remember when they were making the shots for the pandemic that they were running out of I don't know if it was the tubes or the needle ends, but they were having a lot of hard time with the logistics. And I've talked to some of these guys and they're saying that they have 8 months of supply. Everybody is stacking 8 months of supply because they can't predict if they're even going to be able to get it. So everyone's kind of hyper ordering product and stacking it in warehousing. And I mean, we're seeing this with companies like Stag Industrial, anything warehousing based, because people are just trying to store it to keep control of their own product and business. And what happens when the supply constraints work themselves out, right? And then all of a sudden we have this crazy load up of product, but no more demand or issues getting it. I mean, we're going to head into probably one of the wonkiest markets that I probably ever experienced in my period of investing. Unfortunately, I am too young to have fully grasped what was going on in the 2008 financial crisis. I think I was maybe like mid-teens, and I was completely unaware of what was even going on during that period. I didn't even know 2008 really happened. So ignorant as a kid, right? But now I can foresee what's going to be coming, and it's just hard to predict or hard to invest based off this knowledge because there's no time frame. If anybody could predict a crash, we'd all be millionaires, right? So we don't know exactly when all of this is going to play out or what it's going to materialize into. So I think it's going to be really intriguing. And if I was new to the market right now, honestly, if I were you guys trying to save up money, I would just do what Gary Vee does. This is probably the best time to be hustling it up. If you understand the NFT market, if you understand flipping shoes, if you understand something that is materially affordable, that you understand the market behind it and you can start building capital by flipping. Because right now, I can't get over all these markets with Pokemon cards, Nike shoes. It doesn't really matter what you're into, but it seems like you can make money at it today, which is kind of astounding to me. But yeah, it's so crazy, man. It's just a wild market. So I mean, we're still going out. I mean, we're still having a good time. It's not like things are like crazy expensive from certain aspects, but I feel like the middle class, anybody that's like, kind of struggled to get into a home is probably feeling pain in a way that they never have before, right? Groceries are going up, gas is going up, and if it keeps going up, it's going to get bad. It's the brink of bad. Any farther is going to be utterly terrible, right? But what do you guys got for any Q&As real quick? We're going to go out for dinner here, and I just wanted to have a fun little quick 5-10 minute conversation. I don't print as much as the Maddie Mula does. I'm glad that Maddie's sticking around and hopping on the stream today. And it's weird, man, because StreamYard does this crazy zoomed in camera, but when I'm on the YouTube live where I can't share my screen, the camera's real wide. We were doing a live stream last night, and for some reason, some of these streaming services mess with my camera and I can't adjust them. But yeah, what do you guys think, man? How are you guys feeling the markets right now? What do you think about everything? I mean, when it comes to stocks right now, when I'm looking at them, the only thing of value, and it's really frustrating, isn't small caps. I mean, this is no surprise when you listen to like financial education go on about Corsair Gaming, Tattooed Chef. Like when I just, it's weird because I don't want to own small caps like I used to. Because again, when you look at large caps, they're like 30 small caps in like revenue generation. And I feel like that projects out really well over a long period of time. Because again, people keep forgetting, you're paying a premium for Facebook, but you're getting a company that's generating 30-40 billion dollars of free cash flow to constantly reinvest. Tattooed Chef is not going to be making 30 or 40 billion dollars in free cash flow, I don't think, in their entire history, or maybe it might take some time, right? So I'm always a little detoured from small caps, but it seems to be where all the value is right now, because it's just on some of them anyways. But then again, how long are you gonna have to wait for the market to cyclically turn around back into the smaller cap companies? Buying energy and oil stocks, yeah, I think, you see, this is the problem with oil companies. I think they're cheap, but you have to kind of go through like a checkbox list of everything that you think makes a good company from a public standpoint, right? Now, I think oil's greatly valued. I personally don't like oil because of the volatility of the price itself. I mean, we saw oil go from negative, what, $40-50 a barrel to these insane highs within like a year and a half time frame. And I don't like products that I can't control the marketing. Like, look at Microsoft, for example. We head into a pandemic, they're like, hey, we're going to raise prices and we're going to make more money than we've ever made because we're going to be adding an extra 400 or 500 million plus to the bottom line doing this. Whereas oil and energy companies don't have the same dictation over commodity prices. That scares me a little bit. But the other thing that I worry about with oil, and like me and Matt discussed this too, is that big hedge funds, pension funds, they're not allowed to buy certain companies that don't meet certain requirements, whether it's carbon related. I mean, Kevin O'Leary talks about the ESG stuff and all the stuff with crypto all the time, saying that, a lot of these funds can't buy crypto because it's not cleanly sourced. And I mean, even though things can be insanely cheap, if they don't meet the check marks of what a pension fund is looking for, that stock is going to be limited to its growth potential. It's unfortunate, but sometimes cash flow and valuations don't matter in the market. I mean, you look at things like GEO Group's a great example, Altria Group, any of your tobacco companies, they're great valued stocks. But how do they get somewhere when you can't get pension fund or, hedge fund money? I mean, you always have to be thinking from a big fund standpoint. So when I'm positioning my portfolio personally, even though I think there's a lot of value in the oil sector, I'd rather go with a more, cleanly diversified utility. I really like Southern Company, but I mean, it kind of deals with some of the slower growth headwinds as well, having, some of the carbon emitting producers. But yeah, energy is a little annoying, right? You kind of want to buy them like bonds. I look at utilities, I look at like oil stocks, or even MO as like a bond. Like, I'm not buying it presuming that the stock price is going to shoot through the moon, but I am buying it presuming that it's going to stably pay a dividend for a long period of time. So I think if you're looking in those sectors, to not look at them as though they're like these kind of cheaply valued, oh, they're going to make me a lot of money kind of companies. I mean, that's again why I try and focus on large caps, because they've done the job to meet all the general requirements, and it makes it a lot easier from an investment standpoint. Canadian banks are other good buys. I love my Canadian banks. That's probably what I'm going to primarily be buying into the end of this year, because they're fairly valued, probably a little expensive here. I'm looking at maybe adding a new one like Royal Bank. I've already got BNS, Canadian Imperial Bank, Toronto Dominion Bank. I kind of started with the highest paying yielder banks and I worked my way down. That was a smart decision, by the way, because you can't get Canadian Imperial Bank at a 6% yield like I was anymore. And now the banks actually had the regulations come off of them. So we can start seeing dividend increases again. We can start seeing share buybacks again. Lots to look forward to in the Canadian banking sector for not only safe, sustainable cash flow, but hopefully some capital growth on top of that. Now, that's another thing with the banks too, right? Like I should pull this up as an example. I don't think people have as much patience as they might have used to in the market because when I was buying the banks, I didn't make any money on them until after the pandemic, and I've already been holding on to them for like 5 years. And I think people forget how boring the banking sector was until after the crash. Actually, just look this up real quick. Yeah, so I mean, look at the 5 year chart on Canadian Imperial Bank, for example. For almost 4 years out of the 5 years, you had no capital growth on Canadian Imperial Bank. It literally took for the pandemic to crash it and then for it to just go through the moon before. I don't know why, but yeah, sometimes you got to be real patient, man. And this is not a market of patience, I don't think, like it used to be. I mean, look at there's a lot of good examples. Like, I mean, the psychedelic sector was real hot for a while. Now nobody cares, and they've been slowly bleeding. Even though I still think there's potential there. We talked about that yesterday on the stream. Um, a lot of sectors where people just kind of get caught up into hype and they get bored when things kind of settle down. I don't think people truly have like a 5, 10, 15 year time horizon on most of their investments. I think we kind of get caught up in hype. Like even RioCan. Yeah, RioCan was real hype. I remember when we were like really pushing that when it hit its lows and people were really excited, but now the kind of stock has fizzled out. It's not running like it was. There's no more real deals there. So people are kind of like trimming positions, looking for new places to add capital. I'm more impressed the airlines are flying. I hated the airlines, man. I thought the airlines would get hit harder than like, and they did. I mean, they got slaughtered. The amount of debt they added to their balance sheet. Oh, I guess Air Canada hasn't come back for some reason. I thought it was up way more than it is. Yeah, I'm so bearish on the airlines, but I was watching articles yesterday where the airlines are sold out. The amount of people traveling, I think, is higher than it was post pandemic. But again, I think this is part of the hyperinflated market. Everyone kind of cooped up, really wanting to get out. I don't think anyone's doing business travel. So for the fact that, travel is up this much, is kind of entertaining. And we're going to be trying to fly down to Vegas in January. So, I mean, we're going to be dealing with that. I should also shout out two guys that any of the Canadian brethren out there that is going to be wanting to meet up. I'm probably going to shoot a message out tomorrow and we'll start planning a meetup here. If you guys just want to grab a quick coffee, if there's a few of you. And we're thinking about doing it for the first Saturday of December there. So December 4th. So in 2 weeks, if you guys want to get together and probably around 4, maybe 5 o'clock or something, just grab a quick coffee and have a fun little investing discussion. We'll see if we can get a few of you together. Might be fun. The whole thing is coming crashing down all around us. Open your eyes. It's not crashing yet though, brother. Not yet. It's a hard market to grasp. I think this is probably one of the hardest markets to understand because it's just so wonky. You just don't know where long-term sustainable growth can come from. Now, don't get me wrong. When we're talking about 20 years out from now, I'm bullish as hell on this market. I mean, 10, 20 years out, I think that's when we start seeing the real fruition of this technological shift take place when the utility sector changes, fintech, the auto sector. I mean, the space sector is going to start taking off. I mean, there's a lot to be bullish on in the long term, but in the macro, it's hard to wrap your head around a lot of this. And again, every investor should look at themselves like an analyst. I know we don't take analysts seriously like we used to, but considering we're all kind of analysts, I think it's really fun. And a lot of these guys are good too, by the way. I mean, I look at some of these analysts that are averaging 40 to 50% returns a year for the last 5 years. So I kind of take their opinions in strides. But I mean, when you look at the average analyst price targets on things like Google, Microsoft, I mean, Facebook is the only one that is like trading below kind of in the lower range of the analyst price targets. Cause I think the low end price target on Facebook was 270 or 280 and the upper end price target was like 440 or something like that. Whereas Google, Tesla, I mean, they're all finally at these really upper limits. So it's just like, if these analysts have put these price targets on these companies, and again, a lot of these price targets change pretty drastically because nobody wants to be wrong. So if the market's going up, let's put higher market targets on it. But yeah, it's crazy. How do you argue the fact that like everybody and their grandmother? I mean, this is why I think it's appropriate for companies like Apple, Microsoft. I think it's good to have a huge cash position. I mean, this was a big debate with Warren Buffett. I think it was a little piece of floating hair there. Warren Buffett's been, big arguments around his cash position lately, 140 billion. and why he has it, because he didn't make any real investments in March of 2020 there. And that was your opportunity to get rich, right? So people were kind of frustrated that he didn't make enough moves. But right now, it's just like, if anything goes the other way, cash is what you're going to want to have. So that's why I'm trying to start making cash a much larger proponent of my portfolio than it has been. Thoughts on ARC funds right now? I like ARC. I mean, the thing, this is the thing with boredom. People got real hyped up about ARC. The hype died down, and now the stock's been flatlining because people don't have patience, right? Like if you're buying ARC, I love the innovation funds. I love the companies. I like the management. Kathy's getting a lot of heat lately because the stock has been underperforming the general markets in a year. But if you scale that out to a 5-year market, they're outperforming still. I mean, so that's the thing. If you're buying ARC today, like come back to me in 5 or 10 years, let's talk about it. But you can't do a 1-year comparison on anything. A 1-year comparison on anything doesn't, there's not enough time for it to materialize into anything that's actually like statistically concrete. This is what I say about investors. You can't judge your investment thesis until about 10 years has gone by. I mean, that's the hardest part, right? Is honestly, if you're making investments, you have to give it really like 3 to 5 years to understand that you're doing it correctly and making sure you're making the right moves and the companies are executing on the right moves. But then the real true data, I mean, think about it when you buy a company, right? Like, would you rather buy a company that has 1 year history or a company like J&J that has 100 years worth of history? I mean, there's a big difference in the comfort level when people are investing like that. So you kind of got to consider it from your own perspective. If you're new to the market, don't judge yourself too hardly. Be willing to change your investment strategy and just tweak things over time, right? But you can't be judging anything over a year. Like Tesla stock flying up in a year, unpredictable. You can't say you're the greatest investor of all time because you found yourself a unicorn when you couldn't tell me that that was going to happen. Nobody knew that was going to happen, right? So you can't. I mean, it's easy to do it once, but try and do it again and again and again. And this market might be easy, but it might not be fun when the market goes the other way, right? Light speed has affected a lot lately. Yeah, for sure. I'm not sure what you mean by light speed, unless you're talking about like the 5G networks and if you're talking about the speed of information and just the way everything's traveling along here. Same MJ, I bought Facebook CDRs. Yeah, the Facebook CDR thing is interesting. If you guys don't know the Canadian markets, I guess they introduced something called the CDRs, which are basically like it's a way for Canadians to own fractional shares of large cap companies. I find very intriguing. We need to get Google and Amazon doing a split. I swear to God, if Amazon just split their stock, that it would go up way higher. I mean, it worked for Tesla. It worked for Apple. I mean, we always have this discussion. It's a lot harder to come up with a $4,000 Amazon purchase than it is to buy $100 worth of Apple, right? What about uranium mines? You should go watch my video. I just did an interview with the Uranium Royalty Corp CEO, and he thinks that we're only in the second or third inning of uranium. Actually, let me take a look at the spot price because it's really entertaining, actually. Uranium is one of these commodities that's just having an incredible comeback, and it's kind of being underlooked against the lithium markets and kind of like the graphene markets for exploration and stuff. But let me just see if I can find the uranium chart here. No, I typed in uranium stock. I want uranium chart. Yeah, because uranium actually hasn't hit its all-time highs yet, but it's hitting a 9 or 10-year high for its performance. Let me see if I can scale this chart out here. Let's take a look at the 25 years. So look, this is where we're at with uranium. I mean, it used to be all the way up here, and we're barely back scratching the surface of its old highs, right? So a lot of these uranium guys think that we're gonna see a whole new uranium market just because you got people like Bill Gates investing into micro reactors. You got China loading up. I mean, most of these countries need something more sustainable than wind and solar because wind and solar, unfortunately, just isn't that sustainable. And Elon Musk has said that as well, that it comes down to the storage of the energy. If you could solve the storage problem, then it would make renewables much more sustainable because the wind's not blowing all the time, the sun isn't shining all the time, and there's going to be a lot of wasted energy sitting around waiting, right? Whereas nuclear runs 98% of the time. It's very efficient. It's less carbon emitting than both wind and solar. And it actually has the least, I know it's kind of really counterintuitive, but it has some of the least deaths of most utility and gas industries. Because you got to think, like, there's so many people working on oil pipelines and things like that, and it's a dangerous job. Whereas one nuclear reactor, especially a micro reactor, that once it's set up and running, guys, it's pretty much self-sustaining, and you don't need a huge team of people. So it's just a much safer way to go. Other than it's expensive as hell. I'd actually be more bullish on the uranium companies than I would be the nuclear companies. Like Southern Company is a great example, actually. I was listening to some people talk about how insanely hard it is to start up a nuclear power plant. They're never on time. They're constantly delayed. They cost 10 times more than they always anticipate. And I thought it was real fun and intriguing because some guy pointed that out. He's like, I don't trust any company doing nuclear power because they're always wrong. They're always wrong on time delays and costs. But once you get that puppy up and running, I mean, you usually got 60, 80 years of a life cycle of your constant generation, right? So, bro, Algonquin Power, AQN. I like Algonquin Power here. I don't like the amount of dilution they're doing, but they're doing a good job with the dilution. I'd rather them take that on than debt. And I mean, they are investing it into assets that are adding to the bottom line. So I mean, it's a tough debate, right? You gotta give up some dilution. A lot of companies been doing that lately. I think it's what's been holding some of these companies down, like TELUS. I mean, they're doing huge share dilution periods, but we'll see how it materializes. There's no rush. I hold the AQN, like I said, guys. It's like a bond. I don't really care if the stock goes up or down. I just care that it keeps generating power. It's not going to get disrupted, and it's going to be around for 30, 40, 50 years, paying those dividends, right? So we got about 5 more minutes here, folks, before I'm going to head off. I got to get some dinner. I haven't eaten much today. AQN is getting a beating, lol. Only stock having the worst time right now is BABA. Alibaba's a tough one. I mean, Charlie Munger's still a good proponent of the BABA stock. I don't know what to say about BABA. I still hold it for my parents. Not a lot, not as much as I did. It was probably smart scaling that one down. Would you interview Rick Rule about precious metals? I wouldn't mind interviewing. I'd have a great discussion with who's the gold bug? Peter Schiff. Peter Schiff's been going on a huge tangent across YouTube lately with all the big YouTubers, and I think it would be fun to get Peter Schiff on. I think Peter Schiff would be the most entertaining conversation because he's a really smart guy, but lately he's been going off about how he thinks gold is going to 5 to 10x. He thinks that the market's out of control, which obviously I think everybody does, and he's still a huge proponent of a gold bug. I just don't like his opinions on crypto. It's really funny because he's been on some of the biggest crypto channels, and it's so entertaining to listen to the divisiveness of how these guys think. They're kind of in a similar fashion, the way they think about like hyperinflation and like real assets and protecting yourself. But when it comes to that bit, actually, let's look it up real quick. I mean, Peter Schiff, I don't make videos on it anymore because people didn't really watch them, but I thought it was entertaining. Peter Schiff and his son have been in this tangent of arguing about, I mean, his son put all his money in Bitcoin last year, all of his money in Bitcoin. And if you go on, his son's name is Spencer Schiff. Look up Spencer Schiff on Twitter and read his Twitter posts. They're honestly so funny. And I'm like, I would love to be a fly on the wall at one of those dinners or his birthday party, because there was something, I remember there's a big kind of thing going on around his birthday period. Let me look up his son real quick, see if he's done any other tweets. I just feel like it would be such a weird combination for your son to be so against gold and investing in those kind of hard assets and just shifts straight into to crypto. Yeah, so let's take a look here. What has he got going on? Bitcoin prices will smash through record highs. It's inevitable. Everyone gets Bitcoin at the prices they deserve. I'm like, I don't know. It's just funny reading through his son's posts on Twitter. It's really entertaining to see the divisiveness there. But yeah, other than that, folks, what else is going on? I think I'm just going to finish this up here. Again, I really want to know what you guys think. If you own real estate, especially. Yeah, Minority Mindset recently interviewed Shiv. Yeah, Minority Mindset. A lot of the big crypto YouTubers, go check them out. They're really entertaining videos to watch because you get the two perspectives. But I want to know what you guys think, because you guys are kind of throwing stocks at me here. But if you own a house, where do you live? You don't have to give me a direct postal code, but just generally, where do you live? How are you finding the real estate market? Are you younger? Are you older? Are you new to the market? Are you trying to enter this market? How are you entering it? Are you buying stocks? Are you looking into rental units? Are you messing around with NFTs? I mean, are you a shoe person? Are you flipping stuff? I would love to hear more about it. And thanks, Phil B, for the REIT recommendation here. I'm always looking at REITs. I really love REITs. They're phenomenal. I think they're probably one of the favorite. It's one of the huge proponents of my portfolio. 16% of my portfolio is in real estate investment trusts, 4 different ones, and I'm always looking to maybe add more. I love REITs. I don't know why. They're stable. I trust the management. It's like an ETF and an individual holding. Awesome stuff. But stay cool, stay awesome, folks, and I look forward to catching you tomorrow. Peace.